Welcome back to Inside the Markets from GMS Podcasts, where we break down the latest ship recycling intel through the lens of freight, fundamentals, and real-world decisions from global owners. We're back with fresh market signals, and while nothing is exploding, the landscape is definitely shifting beneath the surface. Freight continues to deliver respectable returns. Oil slipped again into the high 50s after another geopolitical shock, and currencies across the subcontinent weakened further, squeezing recyclers just as steel prices dipped at the wrong time. No panic, no collapse, just a market quietly tightening. To help us unpack it, we're back in Athens with our friend and colleague Ilias Stasinos from GMS Greece. Ilias, always good to have you.
Thank you, Jamie. It's always a pleasure. The market, yes, may be unpredictable, but our conversations at least stay consistent.
That they do. Last time we spoke, you said Greek owners were still firmly in trading mode, not even considering recycling unless freight collapsed or geopolitics forced their hand. Looking at the latest intel, that still seems to be the case. Is anything changing on the Greek side?
Not really, Jamie. The situation is almost the same. I have to tell you that the Greek shipowners remain steady. I met with many shipowners while in Dubai for the Bari week events last week, and I have realized that the situation is that the freight market is still giving them enough incentive to keep all the tonnage running. Even ships in their late 20s are squeezing another round of employment because the numbers still make sense. The earnings are still covering the OpEx plus the cost of capital. So, as you probably know how Greeks think, as long as the market rewards patience, they will take every extra voyage they can. And I'm pretty sure that the majority of the ship owners will do the same.
And it's clear the market's still rewarding that approach. But we did see something unusual in the latest reports, a sudden cluster of arrivals at Chattogram after months of almost no activity. Not high prices, not strong demand, just long-parked units finally moving. Is anyone in Athens reading that as a signal?
I would say, Jamie, that this is more of a coincidence than a signal. Those vessels were already hanging around in inventories and they simply found their moment. It does not reflect a sudden surge in confidence. Bangladesh is still dealing with several layers of pressure. The upcoming political season, a weaker steel, currency strain, and buyers being selective. Nevertheless, owners appreciate that Bangladesh can absorb tonnage when needed, but nobody's seeing it as the market leader for the time being.
Fair enough. India, meanwhile, continues to be the most dependable destination, even if prices haven't moved much. A small uptick in steel was noted, but the rupee slid again and buyers remain cautious. Is India still the first choice for larger Greek companies?
I would say that today both India and Bangladesh are options for the big Greek companies and the listed companies. Just to mention that Bangladesh has already 20 approved HKC recycling yards. So for listed or high-profile owners, the priority is compliance and reputation. So in my eyes, I believe that today both India and Bangladesh ship recycling yards are of preference to big Greek ship owners. Even when numbers are not spectacular, India's and Bangladesh HKC certified infrastructure gives them comfort. But let's be realistic. With prices hovering where they are, no one is rushing to fix new deals. India is stable, but nobody will call it exciting for the time being.
Pakistan, on the other hand, is facing a different type of pressure. Steel values took a noticeable hit, the currency weakened again, and there were zero new arrivals. And this week, steel didn't just soften, it dropped by nearly $13 per ton, pulling local prices below the $600 mark for the first time in several quarters. Not the kind of move recyclers wanted to see. What's your read from the Greek owners' side?
I have to admit that after discussing with a lot of ship owners, they were not expecting the fall in the market of Pakistan. But as we have already mentioned in the past, the listed and reputable shipping companies will show preference for HKC approved ship recycling yards. Now, if Pakistan gets the first approved yard across the line, you will see sentiment shift quickly. But until then, I feel that it's a watch and wait scenario. Nobody wants to risk the reputation or cargo relationships choosing a non-certified destination.
Turkey keeps humming along quietly, steady prices, weaker currency, but no actual change in behavior. Still relevant for EU tonnage, still limited for big units. Any movement from Greek fleets?
Not much. Turkey remains a niche option. It's the best option for EU flag and the certain sizes of vessels, but it will not attract mainstream Greek shipon unless prices jump meaningfully. And with the currency now slipping past the 42.30, local buyers do not have much room to stretch anyway.
Let's zoom out for a second. Between what you're hearing from Greek owners and what's happening in the broader fundamentals, weak currencies, softer steel, freight still supportive, it seems like the market is stuck in a holding pattern. Is that fair?
It is fair. Nobody wants to make the first move. Freight cautions the downside, and recycling prices do not offer enough upside. So everyone, is just staying put for the time being, staying cautious, trying to predict where the next shift will come from. This is my view.
All right, Ilias, flash forecast time. You know the rules, quick answers only. One development that could change the mood almost instantly?
To me, it's a clear policy shift in Pakistan, especially if the first stage KC ship recycling yard gets the green light. I think that that will be the thing that will change the situation.
Which destination could unexpectedly tighten or strengthen?
I would say India, if steel steadies and the currency stops drifting.
First vessel type to move if owners finally blink?
All the Panamax bulkheads, they are closest to the economic edge.
And the one thing ship owners should monitor closest right now?
I think the currency movements, they are dictating more of the sentiment than the scrap prices themselves.
Well said. So, to wrap it up, the latest intel shows a market still shaped more by patience than pressure, with Greek owners trading rather than recycling, India holding the compliance crown, Bangladesh briefly active but still fragile, Pakistan competitive on paper but stuck at the starting line, and Turkey staying reliable in its specialized corner. The story for now isn't movement, it's restraint. Ilias, always a pleasure to get insights from you.
Likewise, Jamie, and it's always good to share a clear picture from Athens.
And that's all from today's Inside the Markets. Follow GMS on Spotify, Apple Podcasts, and YouTube, and connect with us on LinkedIn for weekly insights into recycling and maritime trends. I'm Jamie Dalzell, and this is GMS Podcasts. Until next time, stay informed, stay prepared, and stay ahead.